after cutting the price of eggs. If they spend as much time on price of eggs as they're going after diversity, eggs might be free at this point.
One of the striking moments of this week was the moment where President Trump basically had a car show at the White House. Teslas on display with Elon Musk. It comes as, of course, Tesla's sales have been dropping. Elon Musk's approval ratings much lower than President Trump's, by the way. The optics of this, Anna, is it complicated for the White House?
Well, it's amazing that they're doubling down on Elon Musk because, to Cornell's point, this is the opening for Democrats. They're already starting to run ads featuring Elon Musk as the boogeyman. This gives them the B-roll and the visual that you need to say that the White House is, kind of mixing business with the work of the government.
Yeah, Eugene, we should note President Biden did actually have electric cars at the White House as well. So we've seen this type of display.
But Tesla.
Yeah, well, yeah. And that's what makes it so complicated, because in this case, you have Elon Musk who works at the White House with President Trump.
Well, so I looked at that and I thought, there's so many parallels between how Donald Trump sees himself and I think how he sees Elon Musk. Here's a person who's wealthy, who's wildly successful, has great property, at least Donald Trump has great property, doesn't need to do this. Is doing this because they believe the country is headed in the wrong direction and they have a unique ability to come impact and improve it. And then they have been vilified. Donald Trump was vilified for what he tried to do, and he sees Elon Musk being vilified. And that parallel, and Tesla stock has dropped nearly 50% since Christmas. He's paying a price for his involvement, and he doesn't need to do it.
Poor Elon.
I see you wanting to get in. I see you wanting to get in.
Richest man in the world, Elon.
Cornell.
Look, I think I hear you on that, but
he doesn't need to do it.
But see, well, then don't do it. Quite frankly, if you look at his numbers, I think most Americans would argue, we don't want you to do it.
Now, I'm not sure that's true. You look at 2/3 of the country believes the government needs to be reformed, and so at great personal risk for his businesses, he's doing this.
He's also acknowledged there have been mistakes. Is it the way he's doing it?
He's ham-fisted. And by the way, a billionaire is not someone that most Americans going to think understands their way of life and understands the programs and things in the government that actually help them. And you know what he's showing? He's showing that he does not, in fact, understand sort of what Main Street America is focused on, right? And the idea that what Biden did at the White House is similar to the Trump basically being a salesman and hawking the Teslas on the front lawn of the White House is completely different. The ad writes itself.
But why the Democrats aren't doing it? Immediately the next day, there should have been just that ad. Just show that over and over and over again.
You're saying another missed opportunity
Another
for
missed opportunity to get on the same.
Democrats are bad on messaging.
But I mean, like, when you talk to them behind the scenes, they explain the Elon of it all in a much better way than they do when they go on television. They don't talk about him as an oligarch behind the scenes, right? They talk about him as someone who is, in their eyes, doing Doge, because he wants to help his businesses at the end of the day, right? They're talking about that conflict of interest. That's something that the American people actually understand, but they, again, continue to miss an opportunity to actually do that.
And a final 30 seconds, the relationship between Trump and Musk, one of the most extraordinary, and I'm told his low poll numbers actually help that, solidify that relationship.
I mean, we have all been watching so closely. When is this going to blow up, right? Famously. And so far, I think Sarah points it out, they're really similar figures. And this is the only time you've seen Trump do an interview with his cabinet secretary, let him speak like this. It's pretty astounding, and we'll all be watching to see how long it works.
We certainly will. What a great conversation, guys. Thank you so much. That is all for today. Thank you so much for watching. We will be back next week, because if it's Sunday, it's Meet the Press.
You don't do what Taylor Swift does without understanding how to build a business. It's not just about these songs that you hear on the radio.
She is just at the peak of all her powers right now.
How has she been able to change the game with her fan base, with her music?
Our female audience has grown leaps and bounds.
It empowers women to feel like they can sort of buy and do anything.
Nobody else does that.
That's a Taylor Swift effect.
The Swift Effect, this weekend on CNBC.
You want people to trust their money.
This is the market that we're operating in. They need to drive their plans forward.
We need to pursue new business opportunities.
You're always better off having a fortress balance sheet.
Prudent fiscal policy can contain debt.
You're going to take less risk to get to your target now more than ever before.
Making sense of the global economy. CNBC.
For me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. You want to learn more about it. And I think CNBC allows our viewers to fulfill their passions. There's no doubt that the people who watch us care. I am very much focused on trying to land interviews where there is something at stake and asking them fair but tough questions in which their answers are important. I could not imagine covering anything else.
Good morning, everybody. It's a Monday. This is Squawk Asia. I'm Martin Sung. Take a look behind me, working with a nice, strong lead from Wall Street Friday. Stocks rallying on relief that, well, the government's not going to shut down, but still sharply lower for the week. And that's becoming a problem. It is going to be a big week for central banks. The Fed, Bank of Japan, Bank of England, all deciding none of them are likely to cut. What they signal, though, could be important. And gold backing off after breaking above $3,000 a troy ounce. A lot of reasons to buy gold right now. Still, though, with ongoing tariff uncertainty and geopolitics, the Russia-Ukraine ceasefire looks like it is at a crossroads.
Good morning, everybody. Monday morning, I'm Sri Jagaraja. Thanks for joining us on Squawk Box. So let's begin, as we do, with a recap of Wall Street scorecard on Friday. Major averages all sharply higher following a relief rally, with the S&P and the Nasdaq up more than 2% at the close. This after the threat of a government shutdown receded. US President Donald Trump finally signed into law a 6-month funding bill over the weekend after the Senate approved the legislation. Despite Friday's rally, the three major averages were still down for the week, with the Dow slumping 3%, S&P and the Nasdaq both dropping more than 2% and posting their fourth straight week of losses. Martin.
All right, so investors are going to be watching the Fed pretty closely this week. It is widely expected to leave rates unchanged on Wednesday stateside, but some traders, though, see higher odds now for 3 rate cuts this year after a disappointing consumer sentiment report last week. They're now waiting for the Fed's latest dot plot, or summary of economic projections, to confirm their bets. We'll be watching those. U.S. Treasury Secretary Scott Bessent telling NBC's Meet the Press over the weekend, Sunday, in fact, that while he is not overly concerned about the current market volatility, he is not ruling out a recession. Here's some of what he told Kristen Welker yesterday. Take a look.
You know, that there are no guarantees. Like, who would have predicted COVID? Right? So I can predict that we are putting in robust policies that will be durable. And could there be an adjustment? Because I tell you that this massive government spending that we'd had, that if that had kept going, we have to wean our country off of that. And on the other side, we are going to invigorate the private sector. I had a meeting with small bankers last week, and they are ready to start lending. Yeah. And I can tell you that Main Street is going to do well.
So what exactly do you mean when you say adjustment? Could that potentially lead to a recession?
There's no reason that it has to, but I can tell you that if we'd kept on this track, what I could guarantee is we would have had a financial crisis. Mm-hmm. I've studied it, I've taught it, and if we had kept up at these spending levels, everything was unsustainable. So we are putting the We are resetting, and we are putting things on a sustainable path.
Right, so there's a lot to stress test there from Treasury Secretary Beslin. Let's bring in Ed Yardeni now, President of Yardeni Research. Ed, always great to have you on the programme.
Thank you.
If the Trump put is kaput, as you say, what would it take then for the Powell put to return?
Well, I think the Fed is going to be talking about possibly lowering interest rates sooner rather than later. I don't think they're going to do it at the next meeting, but clearly the risks of a recession have increased. While Besant is talking about resetting policy to be more stimulative in his opinion, I've reset my recessions odds from 20% to 35%. I think the economy is at risk of falling into a recession from the turmoil that we're experiencing over tariffs. So, yeah, there's a real possibility here that the Fed will come in at some point. Of course, inflation has to stay low in that kind of scenario, and that might be an issue. The Fed might be boxed in from a Fed put if we get a weak economy, but at the same time, we get some pickup in inflation because of the imposition of tariffs. And April 2nd is the big day for that. We're going to have reciprocal tariffs imposed around the world.
What do you make of that? And how will April the 2nd, and Ed, if President Trump ploughs on with reciprocal tariffs on friend and foe alike, how is that going to change the narrative? Are we going to be, therefore, in a full-blown global trade war?
I think it'll feel like it for a short time, at least, until negotiations get scrambled to do something about the adverse impact on the global economy. I think that's going to be a big event. I would like to believe that we made an important low on Friday, because sentiment is so bearish. Usually when sentiment is as bearish as it is now, kind of like what it was during the previous bear market, that makes a low. But we still have Trump talking about tariffs on a regular basis. Friday was one of those days when Trump didn't talk about tariffs. And I'm only half joking when I say any day without Trump talking about tariffs is a good day for the market.
Ed Martin here, great to see you. So, I mean, look, some people at least are probably hoping you're right. Other people think that maybe back in February 20th, that was actually the start of a new bear market. What do you think? That's one. And two, more to the point, April 2nd, when reciprocal tariffs kick in, and the president has said, look, I'm going to do it. I'm serious about this, right?
Yeah.
We're going to have the whole world throwing tariffs at each other. So it is going to become a full-blown trade war. More to the point, though, are we looking at basically a confirmed recession ahead then?
I think Trump has really confused us all about what the intentions of the tariffs are. I think we all started out, or most of us started out, hoping, believing, maybe naively, that this was all just a negotiating tactic, that talking about tariffs would lead to negotiations that would lead to lower tariffs. But Trump has made it very clear that he views tariffs as a source of revenues. He views it as a way to bring companies back to the United States. He views it as vital to national interests so that American companies produce products that are essential for national security. None of that is temporary. All of that is going to be permanent. And the risk, of course, is that there will be retaliation pretty quickly. The United States has a lot of negotiating power, and I'm still hopeful that it'll be used to lower tariffs, not to raise tariffs. But hope is not a way to manage a portfolio.
Exactly. I agree with you there. So what you're saying is, and I think this hasn't been, noticed enough, although obviously it's been priced by the market. The big change here is that, tariffs used as a tool to achieve unrelated or not necessarily related ends, that's not happening anymore. They are going to be a permanent feature, is what the president seems to be stressing right now, unless, of course, he changes his mind tomorrow.
I mean, he's been saying this over and over again. It's just, I think most of us just can't believe that he seriously means it, because the history shows that that's the outcome is not good. And he keeps comparing himself to McKinley. I hope it doesn't turn out that Hoover is a more appropriate comparison.
Yeah. So, Secretary Bessent is trying to, I think, put a positive spin on things and create this narrative about, look, yeah, things are going to be kind of tough in the short to medium term, but this is all to the good. We've got to plan long term. It's all going to come good. The problem here is politics, and with the midterms coming up, next year, right? Mm-hmm. I'm not sure if Americans are ready to take a little bit of pain now, right? For the promise of gains later on. I mean, they want their cake and they want to eat it as we speak. Yeah. So, I mean, this potentially could become a political problem unless he eases off the gas or unless the Fed steps on the gas in terms of cutting rates, right?
Well, as an American, I can speak for my people. We don't do pain very well at all. And, as we see, when we put in a new cast of characters in Washington, if it doesn't take very long for them to disappoint us and for us to have another regime change. We used to change governments basically every 8 years. Now we do it every 4 years. And with the midterm elections coming up, maybe we're going to do it every 2 years in effect. Gridlock may make a big comeback at the midterm elections because Americans are not going to be happy about what's going on here. They did not ask for a recession. They asked for closing the borders, which Trump did remarkably quickly. They asked for prices to come down, and Trump can take some credit for seeing energy prices coming down just by threatening to produce more gasoline, more oil. But if we fall into recession, which seems increasingly likely, that's the direction of my thinking. It's not going to be a pretty picture for the Republicans in the midterm elections. And I think that may very well start to be a problem for Trump, is a lot of Republican senators, lawmakers, and in the House and the Senate are going to start pushing back and saying the constituency is not happy. There's a lot of people like myself, baby boomers who are retiring, who don't like to see that after everything they've accomplished in saving some money, that their equity portfolio is getting trashed.
No, totally understood, right? So are we in the unusual position, Ed, where, I mean, look, the way I see it, the outcome is kind of binary, right? As I mentioned a couple of seconds ago, either Trump backs off, the president backs off, or the Fed's going to have to step on the gas. At this juncture, it doesn't seem like the president is going to back off, right? Which means we're going to be in this unusual situation where the president's probably going to be putting in a call to Jay Powell and going, listen, Jay, you've got to do me a solid here. I know what we've talked about before, but what do you think?
Yeah, I think that's a very plausible scenario. Usually when sentiment is this negative, when confidence is falling, when the economy falls actually into recession, we get a response from the government that puts in a bottom in the stock market. And in the past, it's been the Fed put. That's been held off, I think, by the perception until now that the economy is okay and that inflation is still a little bit on the hot side. And meantime, we've been kind of counting on the Trump put, but that's been blown away by the president himself saying that the stock market isn't that important to him and that it's a fake economy, he actually called it. And Bessent now, again, I wish they wouldn't start on Sundays to talk about their acceptance of a recession. Because Monday we don't start off so well when they say that.
Yeah, it's not a great way to start off the week. Understood. Ed, stay right there. A lot more to talk to you about. We'll continue with Ed Yardeni coming up in just a little bit. Meantime, spring back to Asia and take a look at China. We've got a bunch of data dropping later this morning. Analysts polled by Reuters expect China's retail sales to have edged higher to 4% in the month of February. The country's fixed asset investment, FAI, that is also seen ticking up to 3.6%. Industrial output, though, that is expected to have slowed to 5.3%. That's down sharply from 6% late last year. All that data could offer more insights into the health of China's economy. The world's number 2, don't forget, amid Beijing's tariff war, which is underway, don't forget, with the U.S. The Chinese currency, the renminbi, is pricing like this. Onshore at 23.77. Offshore H is at 23.19. Sri?
So, given what we've all been discussing and the backdrop here, short-term pain for long-term gain, that seems to be the message from the administration at this point. The market's trying to work with that. Markets on our side of the world are responding this way. We got New Zealand putting on just 0.2%. They've been trading for about an hour. Australia opens in a little less than an hour's time. Remember, this is Fed week, so that's going to be critical. SPY futures are suggesting an opening number in the region of 7,867. So we are looking at some traction there. Japan's markets join us in 2 hours' time. Nikkei futures stacking up like this. Let's flip the board and show you. 37,320. So it looks as though we will put on about 300 points at the open for Japanese equities. Dollar yen exchange rate 148.72. We're going to be back in 2 minutes.
It's important that we have a day that celebrates anybody who's a minority, has been maybe in a position of less power, less voice. It's important to be proud of, what women are bringing to society. So I hope that we celebrate International Women's Day and the achievements of many women around the world. I think it goes back to listening when we think about diversity and inclusion. I actually think it's about involving more people in the creative process who are not like you from the start, rather than inserting them into the output of the creative process. So I would just plea that everyone think, because it's a blind spot that we all have, who else can I bring into this creative discussion who doesn't look like me, who doesn't think like me, who doesn't come from where I come from? And I'm sure that the content and the delivery of that will be, light years better.
Welcome back Monday here on Squawk Asia, back live with Ed Yardeni Research. Ed, let's sort of weigh up both sides of the ledger. Obviously, we know the bad news, right? The S&P's in correction, so is the NASDAQ. Basically, the Trump put, that's evaporated now. Yeah. You've got folks like J.P. Morgan saying that come April the 2nd, right, and the data's already starting to fray around the edges. Come April the 2nd, if we do get reciprocal tariffs, there is a 1 in 2 chance, 50% chance we tumble into recession. And yet, the other side of the ledger, and these are things that Trump has talked about, so I want to get your take on them. If you take a look at, since inauguration, what oil has done, it's down about 15%. If you take a look at the 10-year, we were up at 480. It's down about 50 basis points. We're around 430. Those are things that he said he wanted to do, and he's done them. Yet, they're not good enough?
I think you're absolutely right. I think if he just took credit for what he's done already, which has been remarkable in such a short period of time, and just kind of laid low until the midterm elections, he would get a lot of credit, or at least obviously focus on extending the tax cuts. He kind of got it reversed this time. During Trump 1.0, he started with the tax cuts and then went into tariffs. So he stimulated, and then by that time, the tariffs weren't as deflationary. This time around, he's starting with the tariffs, which is inherently deflationary, and extending the tax cuts is going to be the next issue after that. But I would have done it differently, but I'm not in the administration, and I wasn't asked my opinion.
How much trouble, Ed, is the consumer in?
Well, it's hard to generalize about the consumer because there's, different strokes for different folks, as the song goes. And the reality is younger people, lower income people, and younger people tend to be lower income people, are struggling. Price of everything is high. Insurance on autos is crazy. Insurance on housing is crazy. Home prices are crazy. So, even if mortgage rates come down, I don't think we're going to get a big rebound in the housing market. On the other hand, you've got people like myself, baby boomers. I'm still working for a living, but a lot of my friends are retiring. They had 2 kids. The kids are young adults, and they're free as can be. They don't have mortgages. They don't have to pay for college anymore. They're going on cruises. They're having a great time. They're going out to eat all the time. But I do notice that cruise line stocks are going down.
Yes.
And so the market's saying that there could be some stress to the consumer, even the high end. Look, again, a lot of the baby boomers are retiring with the ample nest eggs, but they don't like to see their stock portfolios going down. That's depressing to them because they don't know how long they're going to live, and they were counting on, they were assuming that what they have is what they have, and so that could be troublesome. So I would say that you don't want to mess with the consumer.
Yes.
Once you do that, that's where the economy is most vulnerable.
You're going back to 1969 with Sly and the Family Stone and Everyday People. Our younger viewers won't know where we're going with this, but anyway, I digress. Headline earnings, Ed, and guidance. That re-rating is already happening with Delta, Costco and Kohl's last week. Are earnings going to roll over? Is that going to deepen? And how bad does it get?
Yeah, well, I've been kind of doing this incrementally, as kind of step by step, watching what this administration is doing and becoming incrementally more concerned about a recession, incrementally more concerned about a bear market. But my initial response to all this is to conclude that valuation multiples have already gone down and there's more risk that they can go down lower. I haven't taken my earnings numbers down yet, but clearly if this thing goes into recession, I'll have to do that. And if I conclude that that's where we're going, I'll have to do that. Right now, silly me, I'm still looking at the economy as being resilient. It really, I guess over the past 3 years, I got it right, and a lot of people got it wrong about the economy. It was remarkably resilient. And I'm keep looking back at the past 3 years and say, look how well the economy has done despite the tightening of monetary policy. I guess I may be overstaying my welcome here and thinking that the economy might stay resilient in the face of tariff turmoil. So I'm trying to be open-minded, not be influenced by what I think I learned over the 3 years.
Yeah, we're all trying to figure that out. So remind me of where you are putting S&P targets for the end of the year, because current estimates, given this evolving balance of risks, seem a bit too optimistic.
Yeah, I definitely I was too optimistic, and so 2 weeks ago I raised the odds of recession from 20% to 35%, and a week ago I lowered my estimate for the endpoint for the S&P 500 from 7,000, which was one of the more optimistic forecasts, down to 6,400, which is still obviously optimistic relative to where we are now. So I'm hanging on, trying to be optimistic, but it's admittedly getting harder.
Yeah, listen, I want to get back to the macro. I mean, a 430 yield on the 10 is a lot better than 480. I think anybody would agree with that, right? Yeah, indeed.
For the economy, yeah.
Exactly, correct. Right, to your point about, sort of a more glass half full approach. You like the resilience of the U.S. economy. One thing we haven't talked about, though, is that yield and the impact that something that Sri likes to talk about a lot, bond vigilantes, what they could be up to and how they could potentially spoil the party and throw a wrench in the works, right? Yeah. And, when you take a 30,000-foot approach, hold on here, I want to get to this. The U.S. runs a budget deficit, which is, I think, 40% of the world's total, runs a current account deficit, which is 60% of the world's total. So basically, I mean, look, the U.S. needs foreign money. They need folks to be buying U.S. treasuries. That bid, though, the indirect bid, that's been tapering off. And, behind that bid is folks like China, folks like Japan. What do you make of that? They're losing faith in the U.S. and also in the dollar, and they're preferring things like gold, obviously, and also crypto.
Mm-hmm. Yeah, well, it's things start to get real messy here when you kind of put everything in perspective. Looking at all the relationships of the markets and policies and things like that. I mean, I don't know why the administration is so relaxed about a recession. A recession is going to widen the deficit even more. And do they really believe that the bond yield is going to come down this time around with the deficit just ballooning in a recession when the bond market was looking for policies that would reduce the deficit? I'm troubled that the bond yield hasn't actually come down more. It's been kind of just really calm there at 4.3%, like Cool Hand Luke just doing nothing at 4.3. I would have thought, given the background, the potential of recession, increasing risk of recession, that the bond yield would have come down, but it's not. And I think that's the supply issue. The bond market's just kind of trying to digest all the bonds that are being issued. And right now they want to do it at 4.3%. They don't want to do it at 3.6%. So that I think is something to be worried about. I coined that phrase, bond vigilantes, back in 1983. Now I'm talking about the stock market vigilantes. We've had one of the fastest corrections of all times in the S&P 500 and the NASDAQ. It's just been straight whooshed down. And clearly the market is reflecting the possibility that everything will be thrown off kilter here and we'll be in a recession before we know it.
Let's wait and see if the Fed's going to ride to the rescue this week. It might be a little bit premature.
It might help.
The signalling will be interesting. Ed, we'll leave it there. Thank you very much indeed. Always great catching up with you. Ed Yardeni there, Yardeni Research. Quick break, back in 2 minutes.
Longevity demands responsibility. As we build on our legacy of growth, we continue to help you navigate today's markets for a better tomorrow. Nomura, connecting markets east and west.
Discover the potential. Witness the opportunities. Experience dazzling exhibitions and captivating events. Explore groundbreaking innovations and future-shaping industries. Stand at the crossroads where the cities of tomorrow meet timeless traditions. Meet China, where every story is a new discovery.
Welcome to Closing Bell. Let's get into the market right now.
Breaking news, market moves,
what it means for your money in the days ahead.
Scott Wapner from the NYSE. Closing Bell, CNBC.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks. And trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
You don't do what Taylor Swift does without understanding how to build a business. It's not just about these songs that you hear on the radio.
She is just at the peak of all her powers right now.
How has she been able to change the game with her fan base, with her music?
Our female audience has grown leaps and bounds.
It empowers women to feel like they can sort of buy and do anything.
Nobody else does that.
That's a Taylor Swift effect.
The Swift Effect, this weekend on CNBC.
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering sustainability on CNBC.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school, but I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Welcome back. Monday morning here on Squawk Asia. U.S. President Donald Trump and Russian President Vladimir Putin are expected to speak this week to talk about ending the war in Ukraine. Washington has proposed a 30-day ceasefire. That deal was put on the table last week, which Ukraine has already accepted. Russia, though, different story. It has yet to commit to the peace plan, in fact, saying it will only do so after a series of conditions have been met. Russia has been gaining ground in the Kursk region, pushing Ukrainian forces back to the border. Putin saying he would spare the lives of Ukrainian troops at the behest of Trump if they surrender. Now, when asked if Russia is likely to agree to a ceasefire, Trump still sounding upbeat. Take a look.
I think he's going to agree. I really do. I think I know him pretty well, and I think he's going to agree.
Staying with geopolitics, the US began a first round of airstrikes on Yemen's Houthis on Saturday and vowed to continue doing so until they ended their attacks on key shipping routes. Those strikes have reportedly killed 53 people so far. It's the US's biggest military operation in the Middle East since President Donald Trump took office, Iran urging the US not to escalate the situation, warning that it is ready to respond, quote, decisively and destructively. The Houthis are threatening to resume their Red Sea attacks if Israel continues to block aid entering Gaza. Wall Street has been on a roller coaster ride these past few weeks and is now negative year to date. But US Treasury Secretary Scott Bessent telling NBC's Kristen Welker that he's not overly worried about the ongoing market volatility. Here's what he said on Meet the Press over the weekend.
Clearly, they are traumatized from what's happened with this affordability crisis that was brought on by the previous administration. They want relief. We've been in for 8 weeks. We are putting the policies in place that will make the affordability crisis go down, inflation moderate, and that as we set the sails, I am confident that the American people will come our way, even if some of the media narrative doesn't.
Well, and just to be clear, I mean, these are polls that are taken 2 months into President Trump's presidency. But let's talk about what happened in the stock market this week. Worst week for the market in 2 years. Does that worry you, Mr. Secretary?
Not at all. I've been in the investment business for 35 years, and I can tell you that corrections are healthy. They're normal. What's not healthy is straight up that you get these euphoric markets. That's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 06, 07. We wouldn't have had the problems in 08. So I'm not worried about the markets. Over the long term, if we put good tax policy in place, deregulation, and energy security, the markets will do great.
I hear you say you're not worried about the markets, but nearly 60% of Americans are invested in the markets. That's their retirement savings. What do you say to Americans who have real concerns that their retirement savings may be in jeopardy?
I say that 1 week does not the market make. As Warren Buffett says, over the short term, the market is a voting machine. Over the long term, it's a weighing machine. And again, Kristen, it would have been very easy for us to come in, run these reckless policies that have been happening before. We've got these large government deficits, 6.7% of GDP. We've never seen this. When we're not in wartime, not in recession, we are bringing those down in a responsible way. We are going to have a transition, and we are not going to have a crisis.
So help bring some clarity, if you can. Are these tariffs a temporary negotiating tactic, or are they a permanent policy here to stay?
Good. So, Chris, thanks for the question. And I can tell you, so April 2nd is going to be a big day. We're going to roll out the reciprocal tariffs. But what I can tell you, and I would encourage your viewers and the public and the media to follow, going into April 2nd, and already now we've seen some of our most imbalanced trading partners come forward and want to drop their tariffs. So by President Trump pushing forward with a tariff plan, reciprocal tariffs, if you drop yours, we'll drop ours. We are already seeing some of the worst offenders come down. April 2nd is an important day, but I would also tell everyone to look what happens from April 2nd to, say, June 30th as the other countries come down too. And President Trump's created a win-win situation here. Either the tariff barriers come down, the U.S. can export more, trade is fairer. It's always been free, but not fair. And then we, or if they don't do it, we'll take in substantial revenues.
U.S. Treasury Secretary Scott Bessent there talking to NBC's Kristen Welker on Meet the Press just hours ago overnight. Now, the Fed, meantime, is expected to stand pat on rates later this week, but investors are waiting for the new dot plot to get an idea, or a better idea, just how many rate cuts the U.S. Central Bank is projecting. That decision due out on Wednesday stateside, so watch out for that. We'll be talking about it Thursday our time. Now, the Fed is not the only central bank set to come out with policy decisions. We'll also hear from the Bank of Japan Wednesday, Bank of England Thursday. Ahead of all those decisions, here's how the major pairs and crosses are shaping up. Let's start with DXY, top left-hand corner of our beautiful wall there. We're pricing at 103.74. We've got dollar yen at 148.63, and we've got cable at 129.27. Let's bring in Andrew Ticehurst, senior economist and also AUD strategist at Nomura, Australia, joining us live. Andrew, great to see you.
Hi, Andrew.
Always a pleasure having you on the show. Got to get to the Fed first. Not expected to move on rates, although there's, I think, building pressure on them to do so. The chatter now is maybe 3 cuts by before the year's out. The new dot plots and the new summary of economic projections. What do you reckon they're going to show?
Yeah, thank you both. Look, our view at Nomura is a little bit different to the consensus. We certainly agree the Fed is not going to change policy rates this week, but we have no rate cuts in our profile for this year. And I would say the growth forecast and the inflation projections kind of play to that view. We expect the Fed to lower its GDP growth forecasts, but to boost its CPI projections. So, of course, for a central bank, that sends you in different directions in terms of the sort of policy response. So we think they're going to sit on their hands for an extended period through this year. We think Fed Chair Powell is just going to highlight extended uncertainty and not commit the Fed to too many actions one way or the other, and just play everything pretty much with a straight bat for now and just say they'll continue to watch carefully and closely.
So, Andrew, if you're not expecting any Fed rate cuts this year, 2025, it means the Fed put, the Powell put, that's not going to be there, right? Which assumes then, I think, and correct me if I'm wrong, that you're expecting the Trump administration to back off. I mean, it's binary. It's got to be one or the other. Otherwise, we're looking at potentially a recession ahead, aren't we?
Yeah, look, it's going to be an extended period of volatility. We think those puts are a fair way away. Stepping back, looking at the big picture, we just flag extreme policy uncertainty in the US that has to weigh on consumer and business sentiment. We're already seeing that in some of the recent data and even the Michigan data on Friday night. All up, the US, I think, is looking certainly less exceptional. We're not calling a recession. Chatting with my US colleagues a couple of days ago, I see they're forecasting GDP growth around about the 1.5% sort of annualised pace. So no recession, but notably lower growth momentum. And I would say it's a bit ironic, of course, because Mr. Trump and his administration, of course, would really like to unleash business sort of animal spirits. But the very uncertain policy environment that they're creating could, in fact, do the opposite. So that is the risk.
Why are you cautious on the dollar, Andrew? And I ask this in light of what has happened since Trump's inauguration. The three things he talked about moving south, right? Wanted lower energy prices, he wanted lower yields, and he wanted a softer dollar, although they're a little waffly about that, right? Although it plays into it, it's a repeat of what happened during the first Trump administration when dollar, yes, was softer. All three have come to pass. Yields have gone down from 480 to 430. Oil is down about 15%, and dollar DXY is down about 5% since inauguration. So, if you're not expecting Fed cuts and if you're expecting the Trump administration to continue hard at it, wouldn't that be positive and supportive for dollar? And why are you cautious?
Look, Okay, so yes, we do have a cautious view on the US dollar, and we think euro and yen can outperform. I think this story comes in two parts. One is on the US side, certainly heightened policy uncertainty, weaker growth momentum, no Fed put, no Trump put. We think they're pretty serious about achieving their objectives. We think they're very serious about use of tariffs. So we don't think they're going to back off on that front. So US growth momentum is looking less exceptional. And this is coming after a period where US equities, US dollar had been super strong, of course. So US stock market, S&P was up 25% last year, and the US dollar was very strong too. Some of that is starting to unwind, of course, on the US side. But, in addition, we've got things moving in other parts of the world too, of course. So I just flag, of course, that over in Europe, we're looking at increased German infrastructure, increased European defence spending. In China, we've seen some policy response from the NPC earlier this month, and it looks like more's coming. And even in Japan, growth, inflation, wage data is starting to pick up. And I think all of that shows that there is a desire out there in the community to shift some of the exposure away from US dollar to kind of safe haven, very credible alternatives like euro and yen. And I think we're seeing some of that price action in gold, of course, which has just hit a record high.
Andrew, what is implied volatility in foreign exchange, therefore telling you in the run-up to April the 2nd and the prospect of risk aversion in global markets, not just reaching a crescendo, but reaching a entirely new level that we haven't witnessed before, if this truly is the brink of a global all-out trade war?
Yeah, volatility is obviously up. There's an index of investor bearish sentiment that I track also. It's at multi-year highs. So fear is pretty extreme right now, and we're only 2 weeks away from April 2nd. It seems very clear that those reciprocal tariffs are going to come on. We also think Mr. Trump is very serious about increasing tariffs on China further. We've had a 20 percentage point increase in tariffs on China so far. We've got another 15% to come. So all up, and again, the administration is prepared to wear some pain here, and the Fed is going to be forced to sit on its hands by the weakening growth but higher inflation dynamics. We've been watching Treasury Secretary Scott Bessent on your program this morning, and I'd take you back to his comments that the US is going to experience a bit of a detox period, and President Trump, not ruling out a recession when asked is just adding to investor angst. So, once again, I think the next couple of weeks, next couple of months, just heightened volatility is set to continue.
Theoretically, at least, tariffs and more tariffs, higher tariffs, should be supportive of the dollar, right? You're cautious on the dollar, and I understand your arguments. It's less so much dollar weakness, more euro as well as yen strength. So I get that. Back to Secretary Bessent's comments, though. We talked about how even ahead of April the 2nd, right, there are a number of countries that have individually come to the U.S. and go, look, all right, I'll put mine down, right? So, the way I like to think about it, it's as though, the U.S. has pulled out a big hand grenade and said, look, here's the hand grenade. Mine's bigger than yours. The pin's still in, right? But come April the 2nd, I could pull the pin out. Then the other guy comes over to you and goes, okay, look, I've got one too. It's smaller, but I'm going to put mine down right here on the floor. I'm going to roll it away from me, and there we go, and then we're good. Is that why you're coming across as more sanguine about the actual impact of tariffs? Is that basically why that other countries are going to go, okay, no mas first?
No, look, I wouldn't necessarily say that. I think Mr. Trump has got several objectives with his use of tariffs. One is as a geopolitical sort of threat, and if other countries lower their tariffs on the US and it costs him nothing, that's great. But, I think the administration also want to use tariffs to rebalance the economy, to re-engineer the economy, to make America great again in their eyes. So they're serious about increasing tariffs as well. And also, they have some plans to increase spending in places, and they need to fund that, of course, in an environment where budget deficits and debt levels are already very high in the US. So I think it's nice. It's almost a free win for Mr. Trump if other countries lower their tariffs in some places. But I don't think that's going to be enough for him. He needs to raise revenue too. So I think that's another reason to expect increases in tariffs from the US.
Andrew, in a week that we have the SMB, the BOE and the ECB, it's going to be interesting to say the least. We'll leave it there. Thank you very much indeed for joining us, Andrew Tisus there from Nomura, Australia. As we tail off into a break, still early hours, but US futures are looking like this. Negative. We're off for a quick break.
Can't miss reporting that impacts your money now. Be here when the opening bell rings. Squawk on the Street. CNBC. Real money, real debate, real-time moves. Scott Wapner, live from the New York Stock Exchange. Halftime report. CNBC.
My side hustle brings in over six figures.
About $10,000 a month.
Over $500,000 since its beginning.
Find your hustle with CNBC Make It's new online course, How to Start a Side Hustle. 3 industry experts break down proven paths to success.
There's a tremendous amount of opportunity out there.
And help you choose the one that fits your life, schedule, and goals.
Find your own path to building multiple income streams.
Register at cnbcmakeit.com/side hustle. Special offer ends April 1st.
On a $100,000 US margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
This FYI is sponsored by Interactive Brokers. Direct market access to stocks, options, futures, forex, bonds and ETFs. One world, one account.
House prices due this morning at 9:30, coinciding with the market open. That's followed by the monthly activity indicators 30 minutes after that. Hong Kong unemployment released tomorrow, and the People's Bank of China to publish the loan prime rate on Thursday. Hong Kong inflation figures and Taiwan export orders also due. And it's a busy week on the earnings front with numbers out from Tencent and Meituan, Ping An Insurance, Geely Auto, NIO, and XPeng among the many reporting.
In the week ahead now, the big headline is the Federal Reserve's upcoming meeting on interest rates. Analysts think the central bank will leave borrowing rates unchanged on Wednesday, with expectations to make the first cuts of 2025 starting in June. Plus, mega-cap tech stock and chipmaker NVIDIA will host a week-long AI conference. The event is garnering significant attention this year as the company promises to showcase breakthroughs and share groundbreaking announcements. And in economic data, on Monday, we get a tally of U.S. retail sales for February, as well as the latest read on sentiment of the nation's home builders as tariffs threaten the industry.
This FYI was sponsored by Interactive Brokers. Direct market access to stocks, options, futures, forex, bonds and ETFs. One world, one account.
On a $100,000 US margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
Welcome back. Trump administration is set to nominate Fed Governor Michelle Bowman as the next top banking cop as early as Wednesday. This after Michael Barr resigned as the Fed's vice chair for supervision earlier this year, avoiding a potential clash with US President Donald Trump over the role. Take a look at how US banks have performed since Trump took office on the 20th of January. Most of the big banks have posted double-digit losses. Morgan Stanley, the worst of the lot, down 16% during that period. Let's bring in Gerard Cassidy now, co-head, I just promoted you there, of Global Financials Research and Large Cap Bank Analyst at RBC Capital Markets. Gerard, always great to have you on the programme. Can we start with the US and the macro picture? If the consumer is in trouble and recession, if not stagflation, is now a non-trivial risk, then at what point should we expect at what point should that be reflected in headline earnings and guidance?
It's going to be interesting because you put your thumb right on it, that the U.S. consumer is critical to the U.S. economy. As we all know, they represent, consumer spending that is 2/3 of the U.S. economy. And if we were to see higher unemployment, a real recession, then certainly the bank stocks would suffer in that environment, as they have in past environments. But I think it's a little premature in calling for something like that. There has been a lot of volatility and uncertainty with what's going on in these initial days of the Trump administration. But right now, we still see a lot of positive signs in the U.S. economy, employment being probably the best sign, where the unemployment rate, as you guys know, still hovers around 4%.
Are the banks and financials losing momentum because the administration hasn't yet announced anything substantive on the deregulation front beyond leadership shake-ups at the SEC and at the Fed, which begs the question, what is then going to unlock the animal spirits and all the M&A activity that was so exciting the market?
It's going to be interesting because, to your point, there was a lot of expectations for bank stock investors after President Trump won the election in November. This group was one of the best performing groups following the election last year. The bank group as a whole outperformed the S&P 500. And up until about 2 weeks ago, the stocks were up on average about 13% versus a market that was up low single digits. And in the past 2 weeks, as you have already pointed out, the stocks have given it all back and then some. And the primary reason is due to this uncertainty in the economy. Will these tariffs that this administration is promoting, will it lead to a recession? At this point, again, it's premature to call that. But to your point on the regulatory side, this is another very important part about the bank stock narrative for 2025. The individuals that have been identified, you touched on Michelle Bowman, who's going to be taking over as vice chair of safety and soundness at the Federal Reserve for Vice Chair Barr, who resigned earlier this year. That's a huge positive for the banks because she's a practical banker. She grew up as a banker in the middle part of our country. She's not an academic. She understands what constraining regulations do to banking. And even Treasury Secretary Besson has pointed out that the stranglehold that the regulations have put on the U.S. banking industry have to be loosened up to engage the banking industry to stimulate the economy. And we expect all of this to happen over the next 3 to 6 months. So we think directionally it's going the right way. We haven't seen anything materialize yet because we need these people in their seats, and we expect them all to be in their seats by the middle of this year.
Yeah, so deregulation is the big play for banks. And, to what you were talking about, Mickey Bowman, her backstory is she used to be a community banker, right? And we remember how she has pretty loudly criticized some of Mike Barr's rule-setting efforts in the past. That's been pretty public, right? So is it going to lead to, and this is the big question, right, Basel III endgame? Is that going out the window? Because, a lot of banks would be pretty happy to have that happen.
Yep, no, it's a very good point, and the answer is no. The banks want Basel III endgame nailed down. They don't ever want it to reappear again, so that's why it's not going to get thrown out the window, because if you throw it out the window, a new administration could come back and revive it. So what I do expect, they will close it down and nail it down, but it will not be anything near what the original proposal was in July of 23, and therefore the banks, I think, are going to be very happy with the final Basel III endgame, and it'll be very supportive of the banking industry.
All right, so, the way that banks can make money, the top layer obviously is deregulation, a much lighter regulatory touch, right? But when you take a look at what's happening with the curve, usually banks like to surf that curve. Yields are down pretty sharply, 480 to 430 or so. But I guess the flip side is, if yields go lower and if the Fed has the economy's back and gets the put in, that is, continues to cut rates, we could be looking at stimulating a fresh, potentially a business cycle, if not a fresh CapEx cycle. And that would be good for banks.
Oh, boy, you're absolutely right. And that's one of the areas that the industry has struggled with is the reignition of commercial lending, not commercial real estate, but commercial lending. And in the scenario you just painted, that would likely happen. And if we were to see the short end of the curve fall by 50 basis points by the fall of this year, long end of the curve stay around 4.25 to 4.75, you get the positive slope to the curve, lower rates, and the stimulation of the economy, meaning loan demand comes back. That would be very positive for the group, no doubt about it.
What about M&A, Gerard?
Yeah. Another good question. And the merger and acquisition activity, which has been at the hallmark of banking for 30 or 40 years in the United States, has been quite subdued. We expect that to accelerate, especially with these new regulators coming in who are more supportive of bank M&A. In the past administration, they made it very clear they were not supportive of M&A, not just bank M&A, but any type of big deals, and that is no longer the case. So we do expect to see more bank M&A coming up this year and well into next year.
All right, a lot to watch out for. Gerard, got to go. Great to talk. Thank you. Appreciate it. Keep safe on the road especially, and do it again very soon. Gerard Cassidy, RBC Capital Markets. We are back in 2.
Binance's Richard Teng and Hashkey Capital's Chao Deng took the future of crypto.
We'll see increasing mainstream adoption of crypto as a payment tool.
There is also the opportunity for Web3 and AI to be combined to create a new invention.
Under Trump 2.0.
The messaging is the biggest capital market is now holding Bitcoin. It will cause many other governments to think through the issue.
The full conversation from Converge Live, only on CNBC.
We're moving from the autopilot era of AI to co-pilot era of AI.
We are just at the dawn of the robotics age.
The more experience you give it, the more capability this AI model can achieve.
Hopefully improves productivity, and it doesn't displace more jobs than it creates.
How to maintain our humanity if we live more and more digital lives.
The new era of tech on CNBC.
There's a difference between ambition and greed. Greed is wanting more. Ambition is wanting better. And not just better for yourself, for your family, for your community, for your country. There's no reason to want CNBC if you're not ambitious, right? If you don't want better insights, better returns. And that's not just financial, though money is a part of it. We're talking about value.
Welcome back to the second hour of the programme. I'm Sri Jagaraja. We are working with a positive lead from Wall Street. US stocks rallying on Friday on shutdown relief, but still sharply lower for the week on tariff concerns. Oil rebounding on Friday, but settling. Little changed for the week. Demand concerns still weighing on sentiment as investors grapple with uncertainties about US trade policies and the Ukraine-Russia ceasefire. Now at a crossroads, plus protesters taking to the streets of Seoul over the weekend. President Yoon Suk-yeol's critics and supporters out in droves ahead of South Korea's Constitutional Court's decision on whether to oust Yoon from the top job.
Good morning, everybody. I'm Martin Sung here at the SGX. Let's take a look back at the lead from Wall Street that we're inheriting and working with. It's a good one. Take a look at the final scores. The Dow at the end of the day up more than 1.5%. S&P up more than 2%. NASDAQ up more than 2.5%. And this is after the threat of a government shutdown receded. Would have happened over the weekend, a partial shutdown, but was averted. U.S. President Donald Trump finally signed into law a 6-month funding bill over the weekend after the Senate approved the legislation. Despite Friday's rally, though, the three major averages are still down for the week. The Dow down 3%, S&P and NASDAQ both dropping more than 2%, racking up their fourth straight week of losses. And don't forget, we've been talking about this. The NASDAQ as well as the S&P are both in correction territory. Sri?
And the Fed is expected to keep rates on hold later this week, but investors are waiting for its dot plot to get an idea on how many cuts the central bank is projecting. That decision will be out on Wednesday stateside. Fed is not the only central bank due with policy decisions. We'll also be hearing from the Bank of Japan on Wednesday, the Bank of England on Thursday, checking in on the major forex crosses. It's interesting to see some rotation out of the US dollar. That's the broad theme here. US exceptionalism fading. Euro is performing relatively well. 10882. Let's give you dollar yen 148.59. Martin.
All right. Now, ahead of the South Korean market open today, you've got some interesting news that happened over the weekend. Sherry Kang, good morning, by the way. The U.S. designating South Korea a sensitive country? What do they mean by that?
So this is South Korea's own nuclear ambition. We're not talking about building nuclear power plants, but actually rearming itself with the nuclear weapons here. And this is a couple of things. It apparently happened back in June. So this happened under the Biden administration. The Department of Energy is saying that this is the lowest tier of sensitivity. So definitely trying to manage the relationship here. But if it does go into effect on April 15th, then it would mean it would be difficult for South Korea to join the United States in terms of some of the initiatives like a quantum technology, artificial intelligence, as well as, no doubt, nuclear energy as well. The idea of South Korea arming itself with nuclear weapons is certainly comes up from time to time, especially among conservatives in the country, as we've discussed over the years. And especially conversations like this do pick up when the United States nuclear umbrella for allies like South Korea looks doubtful. That's when it picks up. But it's quite interesting because it happened right after, well, a couple of months after President Trump's election victory in November last year. But this definitely highlights South Korea's diplomatic incompetency when there's a clear leadership vacuum. So we've got the South Korean government saying that they're taking it seriously, while political parties, as you can imagine, are playing blame game as we speak.
Yeah, and, a little known fact we don't talk about it enough. South Korea is nuclear. It generates about a third of its own power through or by nuclear. But I think the worst of the worry is now that if we're talking about weaponization, that's a totally different story. But would you be surprised, Sherry, if Japan soon gets that same sensitive designation?
So it's difficult for me to say. Obviously, this is not really a part of negotiation with the Trump administration, although it does set up for that kind of negotiation down the road between South Korea and the United States. I think Japan is doing a good job in terms of communicating with the Trump administration, when South Korea, as I've been saying, is not exactly getting any face time with the top leader at the White House. So I think there is quite a bit of a discrepancy at the moment.
Yeah, indeed, right. But the overarching story basically is we've seen what the U.S. did with Europe. It's making a lot of its other allies, including in this part of the world, scared as well. And they're saying, the thinking, I think, is, look, if you're not going to be there, I need to take care of myself. So nuclear now, weaponization is part of the conversation in places like South Korea as well as Japan. But this whole point, Sherry, which you brought up, the U.S. doesn't really know who to talk to in South Korea. Yoon, Constitutional Court hearing could happen as soon as this week, whether he stays or goes. Right? How are things looking right now? We just showed viewers some of the pictures over the weekend on the streets. This looks pretty combustible.
So it really picked up this past weekend in terms of rallies for both sides. Both sides, by that I mean for the impeachment or against the impeachment. The idea was that it will happen last week, but now it's highly anticipated that the ruling The Constitutional Court's ruling will come out sometime this week. It is taking longer than previous impeachment cases for South Korean presidents. I think the idea is that there have been a lot of impeachment cases around high-ranking authorities in South Korea. You've been seeing a lot of headlines around the audit agency chief and so on. So I think that could be a sort of a backlog for the Constitutional Court as well. Given the timing of the Constitutional Court's ruling, I think the domestic politics could get even more complicated and more important to watch, Marty. I've been saying the timing of the ruling has implications for the opposition party, Lee Jae-myung. And this is a guy who has been leading in polls, but he's got a lot of legal problems on his own as well.
All right, LJM could be part of the future conversation. Understood. Sherry, excellent. Thank you. Good stuff. Talk to you again soon. Sherry?
Quick check of the markets here. Australia just joining the trading day. ASX 200 is looking like this. And it is putting on just a very mild 0.4%. Japan kicks off at the top of the next hour. Nikkei futures are pricing a positive start for the trading day. And dollar yen rate is standing at just below 149 last time I checked, about 148 and some change. If you can put that board on, that might be useful. Any moment now. Right, Nikkei futures, 37,310. So we are looking at an uplift there. Dollar yen rate, 148.56. I wasn't too far off. We are back in 2 minutes.
For 80 years, K-Bank has been a driving force in Thailand's economic growth. K-Bank is one of the top 10 largest banks in ASEAN and Thailand's leading digital banking services provider. Our commitment to innovation and efficient financial solutions has earned us the loyalty of customers in Thailand and beyond, forging lasting partnerships for success. K-Bank is the #1 digital banking services provider in Thailand.
กสิกรไทย
We're incredibly proud. We were the first team to launch our Formula One Academy team, and we've got some incredible brand partners which come with us on that journey, as well as other initiatives like 60 Scholars, whereby we run an accelerated mentorship program for young women who might be interested in a career in motorsports, and kind of giving them that extra platform really to understand a bit more about what they don't know really, to help create pathways into the sport. Through our campaigns, I think we're always thinking ultimately about our fan base, and we're lucky enough to have an incredibly diverse fan base. We're the most inclusive team on the grid with 40% female followership. For me, it's always on. It's always something we're thinking about, whether that's how we shoot our content, the talent that we might use. You know, we've got to show up in a really authentic way. Both our fans and our partners expect to see that coming through. You know, it's something which should always be the pie thread really through everything we do.
Welcome back. We're counting down to the Fed's decision this week, but that's not the only event on the calendar that could move Wall Street. CNBC's Dominic Chu has the details on what else investors should be watching.
NVIDIA prepares for a huge AI conference. Oil executives head to Capitol Hill, and a big change this year for March Madness, all in the week ahead. The big headline for the week ahead is the Federal Reserve's upcoming meeting on interest rates. Analysts think the central bank will leave borrowing rates unchanged on Wednesday, with expectations to make the first cuts of 2025 starting in the month of June. Plus, mega-cap technology stock and chipmaker NVIDIA will host a week-long AI conference. The event is garnering significant attention this year as the company promises to showcase breakthroughs and share groundbreaking announcements. Meanwhile, Intel is getting a new CEO. Lip Vu Tan is stepping into the job as the once dominant chipmaker struggles to keep up with NVIDIA. Also in the week ahead, U.S. oil producers are expected to meet with President Trump. The American Petroleum Institute members will talk tariffs, trade, and exports. That's according to Reuters. I'm Dominic Chu. Get all your business news on CNBC.
All right, bring it back to Asia and China. We're going to get a whole bunch of data dropping later this week, and this is the usual trifecta of data. In fact, it's happening less than 3 hours from now at 10 sharp Hong Kong, Singapore time. Analysts polled by Reuters are expecting retail sales to have edged higher to 4% in February. FAI, fixed asset investment, also seen ticking up to 3.6%. Industrial output, though, different story, expected to have slowed to 5.3%, which is down pretty sharply from the 6% and above of late last year. The data could offer more insights into the health of China's economy amid Beijing's ongoing tariff war with Washington. Ahead of the data, the Chinese currency, the renminbi, is pricing like this. Onshore, 23.77. Offshore, H's at 23.14. Let's bring in Yap Fook Hien, Senior Investment Strategist at Standard Chartered Bank. He joins Sri and I live around the desk here at the SGX. Fook Hien, great to see you and a pleasure having you on the show. We're looking ahead to, of course, the Fed this week. And I want to ask you, a lot of people before this week's meeting have been saying, look, honestly, central banks are really not part of the conversation anymore. It's about what happens with tariffs, what Trump says, what comes out of his mouth on any given day, and how yields react. Everything is pricing off yields. But, we had a different conversation earlier this morning. Another guest was saying, look, Trump is not going to back off. He's not going to ease off, right? So it's going to be down to the Fed. The Fed is probably more important than ever if we are to have any hope of averting or skirting a recession. What do you think?
No, I think clearly with President Trump being in power now, I think we can expect a lot of volatility. I think he does like a bit of chaos going on all the time in terms of policies going back and forth. But at the end of the day, what will really drive the market will be the economy. And clearly his policies has a lot of impact on the economy. But, the economy itself can be going in certain directions. And we think what's worrying at the moment, what we worry about is really paralysis. If people do not know what they want to do, is uncertain, and they stop doing things, that's when you can go in and
now, right? With companies, with consumers even.
Yeah, exactly. So that is the worry that the uncertainty brings about. But at the end of the day, I think the economy, the U.S. economy is still on relatively good footing. If you look at the consumers, the job market is still relatively healthy. And we are looking for the Fed to cut rates as well to support growth.
How many times?
Our view at the moment is about 2 times. I know the market is like 2 to 3 times. Our view is that by the end of the year, another 2 cuts by the end of the year. But as that comes through, I think that will be supportive of growth. So we're taking a longer term view. 6 to 12 months. We still do like the U.S. markets. I think in the short term, especially with the narrative, him saying that
you're overweight, right? Still,
we are overweight. Yeah, we are overweight the U.S. But in the short term, if he's stepping away and people worry about the put not being there, I think the market could possibly have another down to 5,300 as our technical support level. We'll see. That's another 5-6%. If he does step away.
5,300 on SPX is what you're saying?
S&P 500, yeah, that's right, yeah.
Wow.
That's a technical support level that we see, yeah.
Do we embrace this volatility and stay invested, look for dislocations, or do we tactically withdraw from this market, raise some cash, and wait for the dust to settle?
It's next to impossible to time the bottom of the market. We do say it for the clients that we speak to over the longer term investors, it is a good time to average in for the U.S. market, because for the longer term investors, we still do see the U.S. economy growing, the growth cycle extending. If we avoid a recession, which is what the market is worried about, and then we do see government equities continue to grow.
For now, though, are you more optimistic on Europe?
Yes, Europe, I think there's been a lot of change. I think the changes there in terms of the debt ceiling being removed, and then the fiscal expansion spending. I think that a lot of that has been going in. We feel that Europe is probably slightly overbought at the moment. I think the approvals that you need in terms of the German government to change the rules to allow them to spend more.
Yeah, that is not voted on Tuesday, I think.
Yeah, I think it's not all set in place yet. And typically in Europe, things will take a bit longer to move. But yeah, it has rallied a lot. I mean, our preference in the US, in the European market, the way to play it is through the sectors like financials, communication, healthcare, and well, defense has rallied a lot. We've got a neutral view on industrials, and it has rallied a lot. But we do feel that actually probably a lot of that is being priced in. So the barbell approach we have, with financials, communications, healthcare, technology, we think will do well. Yeah.
Is China back?
China in the short term is very good. I think in terms of the policies that's being rolled out, the support of the government for the private companies there is very good. And yeah, I mean, the policies which is coming out, the 5% GDP is above what consensus is expecting. The way we play it in China is through an overweight or barbell in your Hang Seng technology as well your high dividend SOEs. We think that is the way to play it in China. But clearly, I think a lot of we've got results coming on this week, so we'll watch that as well. Some of the big internet companies.
How is April the 2nd and the prospect of reciprocal tariffs on friend and foe alike, and the prospect of this trade war becoming meaningfully global? How is that going to change the narrative?
Yeah, again, the headlines that comes from Trump, I think it's going to be creating a lot of uncertainty in terms of the to and fro and what happens. We do try to look through the noise in terms of what's happening at the end of the day, and it's not clear whether he does want tariff for tariff's sakes, or is it part of a negotiation tool. At the end of the day, he'll back off or something. We do think that he actually does want to raise tariff for tariff's sake, but not at a crazy level, because I think at the end of the day, he is still a businessman, and that he will be pro-business and watching the economy as well.
Wants to do a deal.
We're in art of the deal territory, and herein lies the prospect of heightened volatility. Yeah. Thank you very much indeed for that. We will get back to you, Fook Yen, later on in the programme. Yap Fook Yen stays with us. Quick break, back in 2 minutes.
At Interactive Brokers, independent RIAs work with the best research and trading tools designed to help them outperform the markets. Meet them at Interactive Brokers Investors Marketplace for advisors. Advisors at Interactive Brokers keep all they earn on our low-cost platform, with no ticket fees or custody charges, low margin rates, and high interest earned on idle cash. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
You don't do what Taylor Swift does without understanding how to build a business. It's not just about these songs that you hear on the radio.
She is just at the peak of all her powers right now.
How has she been able to change the game with her fan base, with her music?
Our female audience has grown leaps and bounds.
It empowers women to feel like they can sort of buy and do anything.
Nobody else does that.
That's a Taylor Swift effect.
The Swift Effect, this weekend on CNBC.
Let's return to Yap Fook Yen from Stanchart Bank. Let's get back to China if we can. Do we chase this rally in China tech above and beyond the Magnificent Seven, perhaps, if DeepSeek was such a paradigm shift in the mind of investors?
Yeah, well, we think what we've seen has been a lot of valuation re-rating in terms of the Hang Seng technology and China tech. And the valuation is still attractive. Actually, if you look at Hang Seng tech, 12-month forward P is around 18 times. The average we've seen is like closer to 25 times. So there is still prospect for valuation re-rating. And as the policies, the government's a bit more supportive now of the private companies there. We think, yeah, we still do like Hang Seng Technology Index. It's a way to play it. And we pair it as a barbell, as I said earlier, along along with your high dividend, non-financial SOEs.
So 18 and the mean is 25, so there's a reversion potential ahead, so potentially more headroom. I get it. We were talking offline just a couple of seconds ago about how domestic shares, A's, right, have lagged considerably. The H's offshore, right? And that's partly because the composition, tech is where the H's are in Hong Kong, right? I get it. But with the pronouncements coming out of the NPC, tech is back, entrepreneurs are back. It's okay to make money again, right? You would expect A's to have even more headroom, would you not? I mean, it seems to me like there's a pretty strong ARB opportunity.
Yeah, we do think the A shares have lagged. Yeah. We think that there is a catch-up opportunity. And the government, when they look at the stock market, they say want to stabilize the stock market. What they normally are looking at, focus on, is the A share market. So we think there is a catch-up opportunity. It would tend to be more responsive when policymakers unveil more stimulus. As they talk about raising the consumption prospects or the income prospects, we think the A share should react more. We've seen the Chinese, mainland Chinese investors have been buying a lot. Actually, if you look at the southbound flows, it has been going very strong. The narrative, a lot of it has been around the internet and the AI post-DeepSeek. But as the more policies come up from government, we think that should be supportive for A shares as a catch-up opportunity.
Longer term, for A's especially, potentially even for H's as well, right? The new story emerging is DeepSeek AI, right? We saw what happened with EVs, right? There was a hunger wars, as I like to think of it. And the cream of the crop now has risen to the top, BYD, etc. Something similar is probably likely to happen with AI, wouldn't you agree, right? I mean, credit is obviously going to be targeted to startups, etc. What do you think, though? Are we looking at IPOs as exits for a lot of these companies? Or would it be Shenzhen, Shanghai, or Hong Kong, or even, well, unlikely to NASDAQ, but who knows?
Yeah, all of these companies, I think, they will want to grow. Yeah. I think the opportunity is there, and China has shown that they're able to develop AI, be at the forefront, even without the latest chips. Now, the large language models, we think, is probably becoming more commoditized in terms of it being able to develop and having all these AI capabilities. But the U.S. companies are still investing. They're still investing a lot. But they're going to have to target and go more on the higher value added in terms of the agentic AIs or even your physical AIs. But then if your large language models, a lot of it, your generative AIs could be commoditized in terms of the DeepSeek. So the companies in China, we think, will be very, very good at it. They're very good at doing things efficiently and very cheaply, even without access to the latest chips. We think they will continue to grow, but that actually means more volume in terms of applications on devices. Could be in EVs, as you say, in cars, but also much more on devices, robotic devices as well. It could be rolling out much more. So the volume growth, we think, is there. That's beneficial, especially for the cloud providers as well.
What are the exits or returns where are they going to come from for investors, though, from this whole AI explosion that's only just beginning right now, right? Is it going to be IPOs, or are there going to be trade sales? I mean, and what happened with EVs, is that any sort of model, or is it apples and oranges?
Yeah, it will typically be more, going to the public market, IPOs, and then that growing, and then a bit more consolidation over time. But that is something I think you look at, much further out, 5 years out, in terms of the consolidation happening. The near term, we expect them to be growing more, and then a bit more, going to the public markets.
Would it be faster than what happened with EVs, though? I mean, we were talking, I think, over the weekend. Who was it? Baidu, I think, right? Just dropped their new AI product, Ernie. Yeah. I don't know what they're up to. Ernie 5, Ernie 4, whatever, right? And it's supposed to be even faster and better than DeepSeek R1.
Yeah, I mean, a lot of these companies, I think they're doing very well and growing very fast. I think in terms of whether it's faster or slower than the EVs. Then the EVs took many years.
Oh, yeah.
And a lot of state governments behind it as well, backing it as well. So right now it's very, very early days still in terms of the AI developments.
Okay. All right. Fook Kim, fantastic talking. Appreciate the time.
Thank you.
Come back, see us again very soon. Thank you.
Thank you. Thanks for having me.
Yeah, Fook Kim there from Stan Chart joining Sri and I live here at the SGX. All right, now turning away from markets and also, for that matter, from Earth, a rescue mission is underway for Mission Space. SpaceX's Dragon capsule finally docking at the International Space Station early Sunday. The NASA crew swap mission will allow astronauts Butch Wilmore and Suni Williams to return home, finally, after being stuck in space and in the space station for 9 months now. The pair were stranded in space after troubles with the Boeing Starliner capsule forced NASA to bring it back home to Earth empty. Both Wilmore and Williams are expected to return Tuesday stateside, and we'll be looking forward to those pictures. Squawk has taken a quick break. We're right back.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
The biggest names in business.
It was a really good quarter
when it matters most.
This growth was driven by transactions.
Before they talk to Wall Street, they talk to John Fort and Morgan Brennan. Closing Bell Overtime, weekdays on CNBC.
Find your hustle. CNBC Make It's new online course, How to Start a Side Hustle. 3 industry experts break down proven paths to success.
Get out there and do it.
Go to cnbcmakeit.com/side hustle. Special offer ends April 1st.
You want people to trust their money.
This is the market that we're operating in. They need to drive their plans forward.
We need to pursue new business opportunities.
You're always better off having a fortress balance sheet.
Prudent fiscal policy can contain debt.
You're going to take less risk to get to your target now more than ever before.
Making sense of the global economy. CNBC.
I strive to be intellectually ambitious. I want to be making connections, finding the right data so I can help our viewers see around corners. I'm based in Los Angeles, and talking to VC investors or Hollywood executives, I have a unique perspective on what's going on in this incredibly fast-changing world. I love being a business reporter. In covering technology, I'm reporting on change. Ambition can create change.
Giants continuing to step up their AI output in the wake of DeepSeek. Emily Tan, Baidu announcing 2 new AI models. Good morning.
That's right, Desiree. We continue to hear from the likes of Baidu. On Friday, of course, the stock market reacting to the latest linking up Baidu and Tesla. It continues to be in the news in its own social media. The company launching 2 new AI models, announcing the launch of Ernie X1. This performance on par with DeepSeek R1. This is the multimodal reasoning model, giving a stronger understanding, planning, reflection, and evolution capabilities. There's also the Ernie 4.5, which is their foundation model, which it calls excellent multimodal understanding ability with more advanced language abilities, understanding, generation, logic, memory, all more comprehensively improved. Now, this model, 4.5, outperforming that of ChatGPT 4.5 and only at just 1% of the cost. So this is really the special thing the twist with these Chinese AI models is that ever since we had that DeepSeek moment, everything is being done at a fraction of the cost. Also because they are not getting the access to the leading edge, cutting edge chips. Baidu shares on Friday trade up 2.5%, as I mentioned, and that was after the announcement with Tesla and their ADAS, their Advanced Driving Assistance System, to be launched in China. Now, these two new large language AI models are going to be integrated into Baidu's ecosystem, including that of Baidu Search. Now, these two new models being announced a little bit ahead of schedule. It was announced at the weekend, and originally the schedule was slated for April the 1st. So we'll see what kind of excitement we see in the market today when we get up and running in the Hong Kong market in 2 hours from now. Martin, it's back to you.
All right, thank you. And turning to tech in the U.S., two key events to watch out for this week. First, we've got NVIDIA's GPU Technology Conference, or GTC for short. That starts today. The CEO, Jensen Huang, the man with more than 200 leather jackets, is set to deliver a keynote address on Tuesday. Investors are going to be waiting for details on NVIDIA's updated Blackwell chip lineup, as well as its next-gen Vera Rubin super chip. Now, the news flow could provide a critical boost to NVIDIA stock. It's been struggling this year. In fact, it's now in bear market territory. In other words, down more than 20% from record highs it hit back in January of this year. And here's the other thing to watch. Intel welcoming its new CEO tomorrow, March the 18th. Talib Bu is going to be the company's fourth CEO in 7 years. He takes over from Pat Gelsinger, who stepped down last year. Tan has a tough job ahead of him. Intel has struggled to hop onto the AI boom that most chip makers have been riding for the last couple of years. Its weakness in performance has made Intel a takeover target in the last couple of months, with companies like Qualcomm, Broadcom, and also TSMC of Taiwan all reportedly eyeing ways to take over or break up parts of Intel's business. Let's bring in Ed Snyder for more. Equity analyst and managing director, Charter Equity Research. Emily Chantan and Sherry Kang are both part of the conversation as well. Ed, great to see you and a pleasure having you on the show.
My pleasure to be here.
Here's a twofer. Two questions for you to start us off. One, what is Jensen Huang? What are you listening out for from NVIDIA's GTC? What is Jensen going to say? One. And two, with Talib Bu now at the helm of Intel, I mean, this is a guy who realized earlier than a lot of other people that when you're talking about making chips, designing them and making them probably should be two separate activities and streams. Is that what we're going to see happen to Intel? Talk to us about NVIDIA first.
NVIDIA is going to unveil or talk more about their latest chip, of course, the upgraded Blackwell. And they tend to announce their chips well ahead of when they're actually available. So they'll probably give a little bit more detail on the upcoming chip. But I think generally speaking, it's going to be talking mostly about performance and about what they're doing in terms of the next version. The problem you're facing is a lot of these chips are starting to, I wouldn't say reach their maximum. There's still a lot to be gained. But in terms of performance and the number of flops and all the details that go into this, you're starting to push the limits of where you're going to go. So the improvements are going to be only incremental, as you saw with Blackwell. Actually, Blackwell's 2 GPUs in one. They couldn't keep speeding up a single unit, so now they're going to 2. That's the first sign that you're kind of starting to top out. You've got several years to go, but we won't see the big gains we did over the last several years. In terms of Intel, a lot turns on this. Tan is on his resume looks ideal for someone. If you're going to pick someone to turn on Intel, that doesn't mean he can do it. And what we're going to look for is his first public conference call with the analysts. And the reason I say this is because when Gesslinger took over, we've covered Intel for decades now. On his first conference call, we were very much looking to see what he had to say. I can tell you, within about 15 minutes when he started speaking, we went out to our investors and said, this is going to be trouble. This guy's not going to be able to do it. Why? Because when he got on there, he basically congratulated the CEO he's leaving. He reiterated all the strategic decisions he had made. He broke from the past in no way at all. He didn't state any of the problems, and you saw what happened. So we've been around long enough to see large companies go through this. Of the few that have been able to resurrect or save themselves, the incoming CEO, the first thing he will do is be very blunt about the problems and state them in no uncertain terms, basically confirming to all the investors and analysts, I get the problems here, here's our plan. And then it's just going to come down to seeing whether or not the plan he articulates is effective and he can actually execute. So we will see.
All right, yes.
Ed, just one more question on NVIDIA. Since the DeepSeek moment, there has been this focus about price, the cost of these AI large language models with NVIDIA and the next GTC and the announcements to be coming through from the next generation of Blackwell. What are you expecting in terms of the cost for the next server?
So this is a great question. DeepSeek was trained on Llama. So he was trained on one of the few public large language models out there. So it has some advantages. I don't want to get into details. They saved quite a bit of money by pre-training, et cetera. They still was phenomenal in terms of the performance. It obviously caused a big sell-off in a lot of the chip stocks because people thought, well, if you don't have to spend all this money on these massive arrays of GPUs and TPUs to train it, then the revenue coming into NVIDIA and into Broadcom, the two big players in this thing, is going to drop. That didn't happen. You saw Avago's conference call, I think it was last week. They actually are increasing there. And the reason this is the case is twofold. One, almost all the advances in AI are coming from ever larger language models. Even if you don't change the model, which is the software basically, you don't change it, but you make it larger, it gets smarter. This has already been proven. So the race amongst the big guys is to build ever larger models. And the big guys, Meta and Google are the primary ones, but you also have OpenAI and a few other ones. They don't care about price. It's completely immaterial. We've gotten involved and talked to CTOs and the guys who are working with them and designing it. And we had the same question, right? Is power and price a limiting factor? And in both cases, absolutely not. If you're looking at Meta, if you look at Google, you look at Apple, they have more money on their balance sheets than they can possibly spend. They're not allowed to do significant M&A. They're too big. There's only so much they can give back to shareholders. So they're sitting on huge cash piles that they can't do anything with. And then along comes AI. It's something to spend your money on, and you're seeing big gains and big improvements in your performance and revenue. And so it isn't going to be a money factor. The guys who are really spending all the money, they don't care. They're going to spend hundreds of billions of dollars to reach the next large, what they call basically foundational models, as fast as they can.
Yeah, I mean, many say they see the risk of not investing enough at this point. Ed, so we touched on Intel, and NVIDIA, and here's a story that ties them together, and a report suggesting that TSMC has proposed to chip designers, the likes of NVIDIA, AMD, Broadcom, and Qualcomm, to basically join TSMC in their joint venture to operate Intel factories. How does that work when my understanding is that Intel and TSMC, they have a very different manufacturing process? How important is this story going forward in terms of revitalizing Intel?
It won't work. It's not going to work. It's a headline that has been kicked around, I think, largely by TSMC because of the trade wars, of the tariffs, of what the current administration has said about any semiconductor coming into the United States is going to get taxed. I think it's a political move on TSMC's point, and intelligently so, to try to get a U.S. base or to reduce their exposure to a large tariff. But there's no way. The Broadcom CEO has already flat out said he's not getting involved with this at all. Qualcomm won't do it. Both Qualcomm and Broadcom are fabless. They don't have any idea how to run a fab, right? They don't own fabs. They don't run fabs. They use TSMC. TSMC went to them and said, basically, if I work with Intel, would you give Intel some business? I think it's a pipe dream. I think, one, TSMC is so much further ahead of Intel at this point. There's no business or operational plan that makes sense that you would partner with Intel, because it's one of your competitors and it's 2 or 3 generations behind you. What do you stand to gain? The only thing you stand to gain is a political advantage of trying to avoid tariffs until you see how this international economic situation with the new administration works out. Smart move, but I wouldn't take it too seriously about it. And JVs historically have been terrible, right? It's just it's too difficult to do a cutting edge technology when you're dealing with too many cooks in the kitchen. So I don't think there's anything about it that'll come to fruition.
Okay, I hear you. Then what about INTC itself, Ed? You're saying that Tom LaBouche, he's got to come out of the gate strong, unlike his predecessors, right? That first conference call. He's got to just come out and say it, be blunt, talk about the stuff that's not working. Back to this whole idea of the two streams, right? Either you design or you make. If you try and do both, it doesn't work so well, right?
Yeah.
And this is something we've seen develop over the last 30 years. Which way is he going to go? Is he going to say, look, Intel, we're getting out of the foundry business?
That's a very good question. The first thing he should say is he's going to get rid of all these other drags on Mobileye and Altera, quit messing around, sell them for cash, reduce your balance sheet. That would, to me, be a sign that this guy's really serious. He's going to make a big break and start selling off assets because he's sinking. Then you get to the core question, and you nailed it. You've got these two different groups that work together for a long time, but they don't work together anymore. Of the two, the most expensive, the most difficult to turn around is the fab. But here's the thing. Right now, given the international scene, given the tariff scene, it isn't going to do to say, hey, we're going to sell off the Intel fab to somebody else, right? It's going to have to be a domestic player, and I can't think of a single domestic player that would want to buy it. So I think Intel's going to have to retain the fab and try to do their best to improve it, which is, by the way, a huge amount of work, given how far behind they are, technology-wise and customer service. So he's going to have to do that. The product business, he can't let go either. So I think he's going to say, let's clear the deck of everything else, and here's my plan for kind of breaking these apart, keeping them under Intel, but our plan for turning each one around. It's a very difficult problem.
Okay.
Ed, I also got to ask you about TSMC, whether or not they go in with a JV for Intel. They've already announced $165 billion in investment into the United States. This is going to add another 3 fabs, 2 packaging centers, and an R&D center. Now, just in January, when I was in Taipei with C.C. Wei and the CFO, they were talking about keeping R&D in Taiwan, and that's where the leading edge is going to be. Once they put it in the United States, what's going to happen? This is not really so good for TSMC. It's better for the Trump administration. Do you agree?
Well, I think it's good for TSMC, and the reason I think so is they're geographically diversifying their manufacturing, which is really, really important. You obviously know all the tensions with China. There's a huge risk. So much of the cutting technology of the world comes out of TSMC. Samsung would be the only other fab that you really even hint at. So if they diversified in the U.S., they would it'd be something of a safety factor. You'd see the pressure on U.S. companies that are fabless companies like Qualcomm and Broadcom is probably only going to increase to use domestic manufacturing. Whether that's owned by TSMC or Intel, it probably won't make any difference at all. So if the situation doesn't change, in fact, if it persists for the next 4 or 8 years, it's a smart move on their part because they'll be able to route more business through that, keep R&D in Taipei. I think that's a smart move on their part. Once you get it set up and running, it really would put the death absent a small miracle, it would put the nail in the coffin of Intel's foundry hopes. Intel has never been a foundry. They don't know what they're doing at all in the foundry business. So if TSMC had a U.S. domestic arm, I think it would be incredibly hard for Intel to compete with them at all.
Understood. All right. Listen, Ed, got to let it go there. Great to talk to you. Appreciate the time. You keep safe, and we'll do it again very soon. Ed Snyder, Charter Equity Research, Sherry Kang, and Emily Chantan, part of the conversation as well. All right, now executives from more than 60 American companies are going to be traveling to Vietnam this week for an annual business mission organized by the U.S. ASEAN Business Council. They'll meet reportedly with Vietnam's prime minister and other top officials there. Executives from tech and also oil giants. Executives from tech giants, including Apple, Amazon, and also the oil giant ExxonMobil, are going to be among the group represented. The meeting comes as U.S. companies express concern over the impact of Trump's tariff moves on their operations in Vietnam. Let's look at how the stocks involved did last on Friday. Quick break. We're back in 2.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Binance's Richard Teng and Hashkey Capital's Chao Deng took the future of crypto.
We'll see increasing mainstream adoption of crypto as a payment tool.
There is also the opportunity for Web3 and AI to be combined to create a new invention.
Under Trump 2.0.
The messaging is the biggest capital market is now holding Bitcoin. It will cause many other governments to think through the issue.
The full conversation from Converge Live, only on CNBC.
US President Donald Trump and his Russian counterpart Vladimir Putin are expected to speak this week to talk about ending the war in Ukraine. Washington proposed a 30-day ceasefire deal last week, which Ukraine has already accepted. Russia, though, has yet to commit to the peace plan, saying it will only do so if Ukraine meets some additional conditions, including a guarantee that it will not be a part of NATO. Russia has been gaining ground in the Kursk region, pushing Ukrainian forces back to the border. And earlier this morning, the mayor of Ukraine's capital, Kyiv, said that Russia launched an air attack on the city. Martin.
And this is all happening as the U.S. and other G7 countries continue to urge Moscow to accept the ceasefire deal. The G7 out with a joint statement after the meeting in Canada Friday, saying that ministers had discussed a possible response to Moscow rejecting the deal, including expanding sanctions against Russia, putting caps on oil prices, as well as using revenues from frozen Russian assets to give Ukraine additional support. Shereen.
Now, one of the most important barometers of the recession risk is that the price of oil, and oil has been trading about 0.7% higher in early Asian trade. Both benchmarks are wrapping up on a positive note on Friday, with WTI breaking an 8-week losing streak. Prices have fallen 13% since Trump's return to the Oval Office. Brent crude, the global benchmark, hit a 3-year low of $68 a barrel earlier this month. So, as I said, the market here really wrestling with the geopolitics on one hand and the recession risk on the other. Let's bring in Rebecca Babin now, senior energy trader at CNBC Private Wealth US. Rebecca, great to have you on the program. How strong is the bear case at the moment for $50 a barrel oil?
So the bear case for $50 oil is not that strong. And I'll say this up for two reasons. The first is $50 oil would essentially cause U.S. production to head into decline as opposed to increasing for the year. So that would massively impact the global supply and demand imbalances. And there's not much you can say to make producers produce oil for a loss, right? All the rhetoric in the world isn't going to make them say, you know what, we're going to pull this barrel out of the ground at $55 a barrel, but sell it for $50, right? So there's a buffer there, and I think that will kind of buffer the downside and protect us from $50. However, we should be very clear that $60 crude is definitely part of the conversation, and that's really around the fact supply won't decrease significantly between here and 60. We have a lot of demand concerns circulating, at least in the U.S., in terms of what's going to happen with tariffs and how that will impact global demand. And lastly, we have like kind of this supply that OPEC has decided to kind of bring on, albeit very slowly, starting in April, but represents a significant change in their policy from being very restrictive. So 50, I think, is an exaggeration in the conversation, but I do think there's real downside that the market is concerned about. And I think the bears are pretty convicted in terms of feeling that any rally, any significant rally that's based on geopolitical risk will be sold because the kind of supply and demand fundamentals, when they look in the back half of the year, look like we're going to see some builds.
Okay, so we're going to get to 60 more likely than we are to get to 50 on crude. I hear you. And Rebecca, this is really interesting because we had Treasury Secretary Bessent on a media blitz trying to explain what the Trump administration is trying to do. And, you know, the targets that they set up early on in the administration, right after inauguration, right, to get energy down, to get yields down, and to get dollar down, all three are actually happening. It's in the numbers, right? In the case of oil, we're off about, I think, 13% since January 20th, right? But your point is good. It's not to do with any more supply coming out of the market. It's now because we're all worried about falling into a recession.
That's right. It's getting what you want, but for all the wrong reasons, right? And so we do have this reduction in crude oil prices, but it's not coming in the face of like, we've got U.S. production ramping up and we've got this good demand growth, but it's all being met with this wonderful U.S. supply. We have the commodity really facing some uncertainty on the demand side, which is, I believe, the more sensitive side of the supply-demand equation, right? The supply side, yes, we could lose some Iranian barrels. Yes, we could tighten sanctions on Russia and lose some barrels if the ceasefire talks fall apart. However, we've got spare capacity sitting in the Middle East of 5 million barrels that will buffer upside. On the demand side, if we start eroding demand, what are our buffers? You're going to refill the SPR? You don't have the budget necessarily for that, right? That's going to come from production decreases from U.S. producers, which, guess what? That hurts the U.S. economy. So it really is this kind of push and pull of saying we're winning by getting that lower price. But if you think of how we're getting there and what those implications are, it's not quite as pretty of a picture.
Rebecca, does that all add up to a surplus in the region of 1 million barrels a day plus for 2025, notwithstanding the geopolitics, if the Trump administration is now targeting Yemen and maximum pressure against Iran is still another outcome potentially?
I think a million barrel a day surplus in 25 is too high. So I think we're closer to seeing a surplus between 200,000 and 500,000 barrels a day in 2025. And because I really think some of the estimates that are out there in terms of what U.S. production will be, particularly on the Strip, are too high. We have had some efficiency problems from some of the producers that are supposed to grow, particularly Brazil. Canada also is supposed to be another area of growth, but they're not going to grow if all the crude that they need to export is now being tariffed and WCS is trading at a discount, right? So I think the surplus is closer to 200 to 500,000 barrels a day, and that's kind of under that assumption that demand doesn't crater, but it's close to 1 million barrels a day of demand growth, which is still very healthy. So this is not recession type of demand growth, and that supply growth kind of comes in around that 1.2. And we have a modest reduction in Iranian supply, not 1 million off of Iran. Maybe we lose 300,000 barrels.
Yes.
So those are kind of how those estimates shape. I do know that there are massive estimates out there, very bearish estimates for that big build. I think it's overdone. And I would also point out inventories globally are very low. They're well below five-year averages. We are not coming from a place where we have a massive bloated inventory stock,
yes.
And that really does help us a little bit with smaller builds.
Rebecca, what are the demand signals telling us from China? I was over there covering the two sessions 2 weeks ago, And it's very clear that this is a leadership that is committed and has the capacity to underwrite 5% GDP. What are the implications then for the oil market?
I think that's part of the reason why demand estimates haven't come down more significantly is the anticipation and the belief that there will be stimulus in China and help support that demand profile. 2024 was a pretty ugly year for demand in China. I think we need to keep in mind two things. Demand in China is going to come not as much from mobility, jet fuel, gasoline, as it is from petrochemicals. So this is slightly different input of how we get the growth for crude oil. It's not necessarily personal consumption has that same direct linear impact. It will have some. I'm definitely not saying it doesn't have any, but we need to be wary of overpricing that when the real demand growth is going to come from petrochemicals, plastics, etc. And guess where that gets exported? To the US. So before we get too far ahead of ourselves, like kind of pricing in a huge stimulus and having a massive impact on demand, just going to make sure we understand the breakdown of how that really plays out.
Implications from an ensuing trade war, if that is the worst case outcome, if that does eventuate. Rebecca, we'll leave it there. Great conversation. Thank you very much indeed for joining us with your thoughts. Rebecca Babin there from CNBC Private Wealth US. Thank you. Do stay with us. We'll count you down to the market opens in Tokyo and Seoul. We'll return in 2 minutes.
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering Sustainability on CNBC.
I think ambition is really an extension of faith. If you first off believe in yourself, that gives you the power to chase your dreams. My ambition starting out was to have a career, not a job. I wanted to be excited to go to work every day and go someplace where I could grow, learn, and engage. CNBC viewers are definitely ambitious, and I think most of them see their money as a tool, a way to pursue their dreams and pursue their goals. I hope to always be a clear, accurate, and investable voice for all of our viewers. You'll learn a lot here at CNBC. It's also a lot of fun.
Good morning, everybody. It's a Monday. This is Squawk Asia working with a nice positive lead from Wall Street Friday. Stocks rallying stateside on shutdown relief. It could have happened over the weekend, remember, but didn't. But markets are still sharply lower for the week on You know it, tariff concerns. We've got Japan just coming online for a fresh week of trade. Seconds out, off to what looks like a strong start. The Nikkei 225 up better than 1%, close to 1.25%, in fact, 37,505 and change.
China laying out fresh initiatives to boost consumption by addressing income growth. The move comes ahead of the release of key economic indicators, including retail sales and industrial output numbers due later this morning.
And we're watching a reaction in shares of Baidu, the Chinese tech company unveiling 2 new AI models over the weekend in a bid to play catch up with its rivals at home and abroad.
Right, so we continue to be in this exceptionally volatile environment driven by the tariff headlines, although on Friday there was some conviction on the US markets, and that's filtering through today to APAC. Whether this picture is sustained remains in question, given the fact that US equity futures are pointing lower. But still, in the here and now, we've got the Nikkei up by 1.2%, Kospi up by 1%, and Australia putting on 0.7%. Let's get the early movers in Seoul with Sherry. And Sherry, despite, in addition to the external risks coming from tariffs, we got a very challenging domestic political picture to contend with as well. Good morning.
Good morning. And this week, the market could get this overhang lifted potentially, because many have been saying that last week we could get the Constitutional Court's ruling on President Yoon's impeachment case. But maybe this week, because it didn't happen last week, NH Investment and Securities for one saying that if that political overhang gets lifted, it could actually juice the Kospi, which is the benchmark in South Korea. The other catalyst it could be NVIDIA's, of course, the GTC 2025. For the political story, we could look at some of the Yoon proxies, such as small modular reactor manufacturers in South Korea. That could be a sector that we could look at. And for the NVIDIA event, obviously, South Korea's semi-space as well. And we do see some strength coming through for both of these sectors that I mentioned. And let's take a look at what's happening in the internet space. Because a little bit of a follow-up, some update coming through for Naver, which is the Google of South Korea. So the leadership change that I mentioned on Friday, we did see a new CFO being named, Mr. Kim Hee-chul, and the ex-CFO is not actually leaving the company. As I said on Friday, he is the M&A guy, and he would be leading strategic investments, including Poshmark, which was their latest big ticket acquisition as well. The stock is, edging higher by 0.2% at the moment. And then this is a story that could impact Kakao's and Netmarble's of South Korea. So basically the story is that South Korea's National Assembly passing this legislation that makes it harder for spin-off companies going public, and companies like Kakao had interest in taking companies like Kakao Entertainment, Kakao Mobility to the public market. So that could actually have an impact. Kakao shares are down 0.8% as we speak. Marty?
Yeah, sure. I know we're also keeping half an eye on tariffs as well. And we were talking about this just before we went to air. Secretary of State Marco Rubio out with comments saying that once the U.S. has imposed tariffs on major trading partners, it could engage in bilateral talks with countries on new trade arrangements. Now, I find this interesting because it's kind of consistent with what Treasury Secretary Bessent is saying as well, except he was saying, look, even before the reciprocal tariffs kick in April the 2nd, the U.S. already has other countries coming to it and going, look, I tell you what, Don, what if we cut our tariffs ahead of April the 2nd? What happens then? So, this is interesting. At least partially, the Trump administration seems to be already getting what it wants, or the sorts of outcomes.
And this is where South Korea can actually learn from the first Trump administration. Remember, South Korea had to make some amendments to the bilateral free trade agreement with the United States. Yes, so South Korea was not specifically mentioned by Marco Rubio, but I think it's important that there is that precedent that South Korea has could refer back to. And some of the speculative ideas at this point, because it's not official yet, but some of the areas that the U.S. might want South Korea to move on is antitrust regulation for some of the platform companies. We're talking about Metas and Googles, and U.S. beef imports. Maybe Washington would want Seoul to broaden the parts that could be imported into South Korea, and screen quota system. So basically bringing in more Hollywood blockbusters to the South Korean markets. So those are some of the areas that we can look at, but definitely keeping South Korea on their toes.
Yeah, including non-tariff barriers as well. Understood. Okay, good stuff. Thank you, Sherry Kang.
As we take a break, we'll leave you with a look at US equity futures. As we said at the top of the hour, they are pointing downwards. Some caution there. We're back in 2 minutes.
For 80 years, K-Bank has been a driving force in Thailand's economic growth. K-Bank is one of the top 10 largest banks in ASEAN and Thailand's leading digital banking services provider. Our commitment to innovation and efficient financial solutions has earned us the loyalty of customers in Thailand and beyond, forging lasting partnerships for success. K-Bank is the #1 digital banking services provider in Thailand.
กสิกรไทย
I have this philosophy with my team, and I call it marketing that happens. We can think we're killing it, we're doing a good job, but it didn't really happen. When people see YouTube pre-roll, sometimes you hit skip. When you see a commercial come on, sometimes you take out your phone. So how do you hack around that and cut through to really drive and engage a consumer in today's day and age? It's important for brands today to be in touch with culture. It's not a matter of like, oh, here's a cool thing, let's just do something with the thing. It's how does it connect to your brand point of view? How do you continue to keep it modern and fresh while staying true to the core brand idea? How do you drive relevancy and go from product marketing to brand building? And it's this idea of deepening that consumer connection so that you can continue to really unfold with today's consumer, playing on yesterday's equities that can really take it to the next level. And so that's a lot of what I'm really looking to build. I think the sky's the limit.
Welcome back. We've got a couple of big central bank meetings this week. Bank of Japan's decision will be out on Wednesday, Bank of England on Thursday, and the big one, of course, the Federal Reserve. Also due on Wednesday stateside, that's Thursday, Asia time. Markets largely expect the Fed to leave rates unchanged this week, but its dot plot and policy projections could provide a little more clarity about the Fed's policy path for the rest of the year. We also have summary of economic projections, so that will make for interesting readings too. The impact of tariffs on inflation and the broader economy is still a big unknown. US Treasury Secretary Scott Bessent talked about that on NBC's Meet the Press on Sunday. Take a listen.
April 2nd is going to be a big day. We're going to roll out the reciprocal tariffs. But what I can tell you, and I would encourage your viewers and the public and the media to follow going into April 2nd. And already now we've seen some of our most imbalanced trading partners come forward and want to drop their tariffs. So by President Trump pushing forward with a tariff plan, reciprocal tariffs, if you drop yours, we'll drop ours. We are already seeing some of the worst offenders come down. April 2nd is an important day, but I would also They tell everyone to look what happens from April 2nd to, say, June 30th as the other countries come down too. And President Trump's created a win-win situation here. Either the tariff barriers come down, the U.S. can export more, trade is fairer. It's always been free, but not fair. And then we, or if they don't do it, we'll take in substantial revenues.
Do you acknowledge, though, that tariffs will ultimately drive up prices, at least in the short term? That's what economists, that's what business leaders, that's what CEOs say.
Well, they don't have to, because I believe, especially with the China tariffs, that Chinese manufacturers, they will eat the price, or eat the tariffs. I believe that the currency adjusts, and I believe if we look during President Trump's first term, that all the other things we do, if we're deregulating, if we're getting energy prices down, then if we look across the spectrum, Americans will realize lower prices and better affordability.
As you know, the administration has been pressed repeatedly on the prospects of a recession. The messaging has been a little mixed. Let's look at some of what we've heard.
I hate to predict things like that. There is a period of transition.
There's going to be no recession in America.
Well, look, I think you never can predict the future.
Mr. Secretary, can you guarantee the American people here and now that there will be no recession on President Trump's watch?
Well, Chris, you know that there are no guarantees. Like, who would have predicted COVID? Right. So I can predict that we are putting in robust policies that will be durable. And could there be an adjustment? Because I tell you that this massive government spending that we'd had, that if that had kept going, we have to wean our country off of that. And on the other side, we are going to invigorate the private sector. I had a meeting with small bankers last week, and they are ready to start lending. Yeah. And I can tell you that Main Street is going to do well.
So what exactly do you mean when you say adjustment? Could that potentially lead to a recession?
There's no reason that it has to, but I can tell you that if we'd kept on this track, what I could guarantee is we would have had a financial crisis. Mm-hmm. I've studied it, I've taught it, and if we had kept up at these spending levels, everything was unsustainable. So we are resetting, and we are putting things on a sustainable path.
All right, bring back to Asia and China, watching out for key data to drop later this morning. It's the usual trifecta at that time of month now. And it's going to be, the numbers are going to drop at 9:30 a.m. Hong Kong, Singapore time. So we'll break them for you hot and fresh. I correct myself. It's home prices specifically, which are going to drop at 9:30. We're going to get the trifecta at 10, half an hour after that. The monthly economic indicators, FAI, fixed industrial assets, industrial output, and also retail sales. That should give us a better idea what kind of shape China's economy is in, at least the first 2 months of this year, through and over the Lunar New Year period. Over the weekend, Beijing unveiled plans to revive domestic consumption. Its special action plan is broad-based, taking steps like increasing wages, stabilizing the property market, and offering incentives to increase the birth rate, including childcare subsidy. Shri?
Be interesting to see if that data trifecta from China later on this morning is going to be distorted by Lunar New Year. So that's one thing to bear in mind. The other issue here is the markets are in risk-on mode. How long is that going to last is anyone's guess, given the to and fro on tariffs and given this adjustment period that the administration keeps talking about. April the 2nd is going to be critical, and of course we are in Fed week. So all to play for. Nikkei 225 in the meantime up by 1%, Kospi up by a similar quantum and then some, Australia up by 0.6%. Right, good friend of ours, Richard Harris, is with us now, Chief Executive at Port Shelter Investment Management. Richard, great to have you on the programme. Let's start with China, and can we really be bullish China and the mainland markets when this Damoclean sword of April the 2nd and reciprocal tariffs is hanging over all of us?
Well, of course, it is an issue. The whole fact that, China has a big export sector with the US, and tariffs are a danger. However, we've got to remember that exports, indeed imports, are count themselves out. They are a relatively small part of the economy as a whole, and the Chinese authorities really have to focus first and foremost on fixing the domestic economy. And as you said, we've got a press conference today about consumption. We got lots of figures this week. It's going to be interesting to see quite where those figures are going to go. But the direction of travel, I think, with China is absolutely sure, which is that the authorities are determined to stimulate the economy, determined to keep it going. And even if we see some issues with the export side of the economy, they are determined to get the domestic economy going because they have to.
For sure. And it was very clear to me in Beijing 2 weeks ago that the leadership is not only committed and has the capacity to underwrite 5% GDP, but is also getting behind the private sector. So do we chase this move in China tech, Richard, above and beyond perhaps the Magnificent Seven? And how much of a paradigm shift was that DeepSeek moment?
Well, I think DeepSeek was a paradigm shift because what it basically said was, AI, let's face it, at the moment, it's still pretty approximate in terms of its results. What DeepSeek, I think, basically showed was it's okay to be approximate. It's okay to be just good enough. So they came up with a model that was just good enough. But I think that one of your previous correspondents was basically saying that, yes, we still are in the age of big investment, big large language models, and I think that will stay. I think the Chinese will also follow that as well. So I think the DeepSeek was important. But going back to what you were saying about the Chinese economy, I mean, I've been saying now for quite a while that we're in an era of a great pivot. We've had the US doing extremely well. Everybody's dived into the Mag 7s. Yes, they're coming off. There's still probably a place to have some money or to keep your money. But I think the Chinese tech sector looks very good. We've seen with the Chinese electric vehicle sector that when the authorities get a bee in their bonnet and they say, let's invest somewhere, we can see what happens there. And I think they've got that now with AI and they're developing their digital economy. And I think that China is looking very much at import substituting many of these technological activities. So yes, it's going to be the place where that's where the investment's going to be.
Yeah, it's not like they have much choice, right? If with all these tech export restrictions, but Richard, most of the excitement and the money over China AI, especially post DeepSeek, about a month ago, 2 months ago, I can't remember now, has gone into Hong Kong, right? Hang Seng Tech, etc. A's, interestingly, have lagged behind. Noticeably. But now that we've had the NPC out of the way and you've got the very top saying, look, we love AI, Jack, we love you, come back. Entrepreneurs, it's okay, it's safe to be entrepreneurs, it's good to make money again and get rich. Are you expecting A's to catch up? And where is that money going to come from?
Well, you're quite right. We're seeing the direction of travel with everything the Chinese authorities are saying towards reflating the economy and reflating the domestic economy. Yes, we've seen some money go into Hong Kong, but Hong Kong, in a sense, is an option on China. Hong Kong does better when China does well. Hong Kong does worse when China does badly. So I think Hong Kong's the canary in the coal mine. It's done quite well. I think the domestic economy has lagged. It's reflecting the fact that there still needs more work to be done in property, in consumer, and a number of the other factors you were mentioning earlier. So I think the domestic economy, very slow to turn around, but it will turn around. And yes, you're right, the A shares do look interesting.
Okay, where's the money going to come from, Richard?
Well, where's the money come from in any reflation? As we know, when money is put into the market, as we've seen with the US, eventually it ends up in the stock market. Eventually it ends up in assets, and eventually it ends up in asset inflation. In a sense, that's part of the point, because as assets go up, you can leverage against them, the economy starts moving again. So I think the process we've seen in the US is likely to be repeated in China.
Okay. Richard, stay right there. A lot more to talk to you about. Continue with Richard Harris in just a little bit. Meantime, we'll take a quick break. As we do that, let's take a look at some of the biggest movers up in Tokyo so far this Monday morning. Nikkei 225 is up about 1%. coming to 20 minutes into a fresh week of trade. We're right back.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Kelly Evans with in-depth reporting of the day's most compelling stories, economic analysis, market updates, and where to find opportunities now. Strengthen your investment strategy on the exchange. CNBC.
Brian Sullivan joins Kelly Evans. Power Lunch.
CNBC.
You don't do what Taylor Swift does without understanding how to build a business. It's not just about these songs that you hear on the radio.
She is just at the peak of all her powers right now.
How has she been able to change the game with her fan base, with her music?
Our female audience has grown leaps and bounds.
It empowers women to feel like they can sort of buy and do anything.
Nobody else does that.
That's a Taylor Swift effect.
The Swift Effect, this weekend on CNBC.
Welcome back. Monday morning here on Squawk Asia. Let's get over to Emily Chan Tan, who's been watching something that happened over the weekend. And Baidu just did a new earning drop, a new improved earning. What are we up to, 4 or 5 now?
We've got 4.5, Martin, 2 versions of Ernie being launched at the weekend. We got Ernie 4.5, which is its foundation model, says it's excellent multimodal understanding ability, more advanced language ability, understanding, generation, logic, memory, and comprehensively improved, that it even outperforms the likes of ChatGPT 4.5 and just comes at 1% of that cost. Now, the second model is Ernie X1, the performance on par with DeepSeek's R1. This is its multimodal reasoning model, giving it a stronger understanding, planning, reflection, and evolution capability. So the market will get a chance to react when the Hong Kong market comes online in about 40 minutes from now, the pre-market activity at 9 o'clock. We're also watching what's happening in the Taiwan market, set to open at 9 o'clock, and its big index heavyweight Han Hai Precision, also known as Foxconn, out with its latest report card for the full year. Now, as we have the GTC kicking off in San Jose Monday U.S. time, that, of course, a huge client that of Han Hai, record high numbers for the full year, $4.6 billion, up 7% year over year. The company expects its cloud and network to grow significantly. Now, it made up about 30% of its revenues. It's going to be jumping to 50% by this year. Revenues of $208 billion, up 11% year over year. Now, sales from AI servers are expected to surge to over $30 billion in 2025. Revenue jumped 150% year over year. Now, it's going to be enabling Han Hai to secure 40% of the global AI server market. So be watching out for shares of Han Hai at $170 per piece. Now, as we talk about GTC, a huge supply chain of NVIDIA exists in Taiwan. So pull up some of those stocks. We're going to be watching TSMC, which makes the chips for the GB200 that it passes on to the likes of Han Hai Quanta, as well as ASUS Tech to be making the servers for NVIDIA. So this coming week, we are going to be continuing to watch all these AI names traded in the Taiwan market. Here in Hong Kong and China, I should point out, we're going to be getting a slug of data at 10 o'clock. This comes on the back of the special action plan for boosting consumption, which was announced by the State Council on Sunday. So we're going to be getting a press conference at 3 o'clock today. We're going to be waiting out for more details, and a boost is expected in the Hong Kong market on the back of that. So watch out for the activity data due out 30 minutes after the market open. Martin, it's back to you.
Great stuff as always. Thank you, Emily Chantan, live up in Hong Kong, where our guest host is still with us live, Richard Harris, Port Shelter Investment Management. And we can get back to China in just a bit, Richard. But I see here from the notes that you sent over, you see, as the U.S. economy slows, potential in bonds, fixed income. Is this your way of saying that this is a time to add duration?
Well, I think if you're looking at the U.S. bond market, it's, we tend to look fairly short term at these sort of things. But if we are looking at increased inflation, and I think we are as a result of Trump policies, although as we saw with that interview with Besant, he's very keen on talking about jam tomorrow. But if we are looking at inflation, then obviously the Fed are likely to keep rates fairly high. But I think that there is also this specter of inflation going around, which may mean that U.S. bonds, certainly in the longer term, might do better. Because looking further into the future, if we do see a slowdown because of the Trump policies, then we're likely to see a bias on interest rates coming down. So I think we're really looking at two phases here. One is, yes, interest rates may well go up. And of course, that may cause a conflict between the Fed and the Trump administration. But I think if the economy slows, and at the moment the bias very much on many indicators, whether you're looking at inflation, whether you're looking at growth, whether you're looking at damage to supply chains, all of this indicates that we may well see some sort of slowdown further on. And of course, that's going to mean that interest rates will fall.
Jam tomorrow, such a wonderful British expression, Richard. And here's another one, nervous ninny. If we are nervous ninnies, then do we hold more gold in this kind of environment of uncertainty?
Well, gold certainly seems to be the asset of the moment. I mean, gold is rather odd. People think it goes up a lot and people hold it for long periods of time, but it tends to go up in jumps. It's very dependent on the kind of narrative that goes around. And some people may say, well, Bitcoin is replacing gold, but I don't think so. Bitcoin has a very short history. Gold has been around for 5,000 years. It does seem to be something that moves when we have a period of instability. The US dollar hasn't reacted in quite the same way with the geopolitical instability that we have had recently. So I rather suspect that people are saying, well, maybe if the dollar is weakening, we don't necessarily want to go into the euro or any other currency as a proxy to that, so maybe gold is the place to be. So that's why I think gold is moving at the moment. And yes, certainly investors should certainly have a proportion of their holdings. I mean, I'm thinking sort of in the 5-7% in gold, because it's the sort of asset that moves on a Tuesday afternoon when nobody knows.
It's a diversifier, Richard. Excellent as always. We'll get back to you later on in the programme. We're back in 2 minutes.
We're sitting ducks, waiting for them to infiltrate our defenses. Millions of tries, and they're in. Uh-oh, this one's in the code.
Be first on world markets, first to the global business conversation. Get a jump on the investing day every day with Frank Holland. Success starts early. Worldwide Exchange. CNBC. Find your hustle. CNBC Make It's new online course, How to Start a Side Hustle. 3 industry experts break down proven paths to success.
Get out there and do it.
Go to cnbcmakeit.com/side hustle. Special offer ends April 1st.
We're moving from the autopilot era of AI to co-pilot era of AI.
We are just at the dawn of the robotics age.
The more experience you give it, the more capability this AI model can achieve.
Hopefully improves productivity, and it doesn't displace more jobs than it creates.
How to maintain our humanity if we live more and more digital lives.
The new era of tech on CNBC.
I took my first journalism class in high school. It felt like a superpower. I find it really meaningful to reach new audiences, women, people of color, younger demographics. A lot of traditional financial advice might not take into consideration that people have debt or that rent is so expensive. To me, ambition means taking on new opportunities that take you out of your comfort zone, but help you learn and grow.